Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek with Kooima Kooima Varilek. Lots of green on the board this morning in grain and livestock futures, except for live cattle have been back and forth on both sides is steady. But Scott, that certainly has not been a concern. We've been closing strong just about every day here. New highs for the move again yesterday. How much higher do you think this market's going to go? And especially talk about what's happened with cash this week.
Yeah, for sure. And thanks for having me. And this has kind of been a typical day lately for this week in the cattle. We're just a little bit lower, and not aggressively lower, just slightly, and then grinds its way back. That's kind of what we've seen on this entire rally over the last several weeks, and been overbought for a long period of time. So I think there sure is a crowd waiting for a bigger correction, but at the end of the day, we come on strong. Funds are defending their position and make some new highs towards the end of the day. And you get a lot of hedging fills. And, you might sit and work orders all day long. And then it's the end of the day, all of a sudden you get some of those to fill. So defending their position is the funds. And that's been a great sign. And how high we can go. We kind of had looked at these 190 levels on the Ds, and now we're getting there. We're getting really close, within a couple dollars. So that's kind of its first spot that it's going to bump its head a little bit. And we have to decide, do we have the ammunition? Do we have the firepower to try to get this thing to the next level, to 200, let's say, so to all-time highs? And I think this last slow grind higher, it feels a little spooky, because I just don't know that we had a lot of guys catch this move after everybody got so beat up on that large break. It washed a lot of the longs out. Now it's just got this slow, steady grind, and we're more interested in trying to find some coverage than we are to say, hey, let's go higher. So feels a little early, possibly into the fall yet, before we have, the fundamental news to maybe back that up, because we've just gotten these October D's prices higher than what the cash is. So cash was the reason we turned this market around. Was able to hold in the 180s, and the board had to come back. Cash led this rally higher, and now here we are getting 187. Got that bid every day from Tuesday till today, and it has gotten some traction across the countryside, north and south. Now some of the bids are out for November 10. You never like to hear that we're selling cattle for a month out. But that would be from a packer that typically does that, but it does give the packer a little bit of leverage. But there is, several packers that are out with those bids. We can't get 188. We're trying. So it is laying flat at 187, and cattle are moving from different places. So I know there's some northern cattle heading, from Iowa, South Dakota down to Kansas. So those shifts there just kind of tell you, okay, this supply is still tight. So I think that's a little bit evident that that's happening. 187 will take it. It's just a little weird that the board's at 189.
Yeah, 187 actually in the South would be a little better than last week, about $1, right?
Yes, about $1 higher. So that's a good sign.
Yeah, no doubt. Like you said, negative basis is odd, especially since we really aren't in any jeopardy of any deliveries, are we?
I've kind of been watching that the last couple of days, thinking, when will somebody, throw some deliveries on the October board? And maybe it's just the fact that we've had all of the packers bidding, and it's been easy to sell cattle because of the tight supply. So there really isn't those outfits that are having a hard time getting cattle moved, and they're frustrated. So that you use the board to get some of that there. So we haven't seen it. I've been a little worried about it. So I've been kind of waiting for that day when we get slammed by something in the South, but have not seen it yet. So it's challenging it, $2 higher on the board, higher than the cash. Yeah. Usually that $2 makes it a little bit worth it for somebody to try to make that move, but maybe somebody knows something. I guess it's impressive how strong it has been, even with just that steady cash at 187.
Yeah. You and I last week talked about the slower chain speeds by the packers, and obviously it's working for them. We've got choice beef up in the 110 area. So, we're selling beef there, it looks like. That's positive.
I think that helped. I think when we got choice under 300, I think there was a few worries, and we're starting to look at packer margins, and they can slow their chain speed down for two reasons. One, to get those boxes up, and two, that we just don't think that the cattle are abundant in numbers. So to try to put more weight on the cattle that are out there, and they're getting that done. weather pattern that we're in that feels like it's never going to rain again. And so it's very dry yards. Cattle are growing, they're eating, they're growing. The shifts in the weather from hot to cold could maybe slow it down a little, but really we're putting the weight on these cattle, and I think the packers wanting us to do that. That's why you're seeing some of those slower chain speeds. So weight's down a little bit yesterday. That's a great sign to see that we finally have pulled that number back a little bit. And the packers saw that number 2 weeks ago. We just get it yesterday. So we're a little bit behind. So maybe that's why we got to slow some chain speeds. We can't let that weight come down too far because they're going to need it. With tighter numbers, they want those extra pounds on there for sure.
Yeah, I don't know if it was you or somebody else that said 30 pounds over a year ago equates to about 20,000 head a week or something of virtual cattle that we put back on the market. So that's why they're doing it, right?
Yeah. And we're pretty good at it. We got cheap feed, so yeah.
No doubt. My only concern is who wants to buy up here. It's just like the stock market, when you're up at these highs.
Yeah, it gets hard. I mean, as it just grinds higher. So you're trying to figure out, okay, I missed this. What do I do? I mean, so it's too hard to try to buy it now. Yeah. I think guys are more looking towards, well, what are next year's prices at, and kind of layering in a few hedges here and there. It's grinding against our position, but it's at least giving us an opportunity to say, hey, I have some prices here that work. We haven't had that for a while. So this rally was needed for some of these, a lot of the cattle that you buy. We need some come on the board before we can do anything. So options make it really hard. They're really expensive. So you see the put prices down there, and yeah, they're aware of how high this market is and that it could possibly break. So it's hard using them. You're having to take a little bit of risk if you are wanting some hedge protection on, but I think it's going to have to bust through that 190. We're going to have to get cash to 190 before it's going to take that next leg for guys that are going to want to buy it. So buying it $2 higher than the cash, probably not going to happen for me.
Yeah, and then we'll hopefully go up to those all-time highs, but we'll see when that happens. Okay, the hog market, you and I continue to talk about how it's kind of outperformed. We're going to get October off the board here pretty soon. Do you anticipate the funds are going to continue to defend their longs? Is this just technical, or is there, something other than that going on, especially maybe more demand?
I think it just does feel a little bit like funds to me, how they've gotten behind these livestock prices together, cattle and hogs trading together. And it's just like there's just maybe some of that money flow, the term that you like. And I don't hate it either. But I think that it's a little bit of that. I mean, I feel around with some of these fundamental guys, and I feel like we're all in the same boat, just thinking, okay, December's pretty high, waiting for that break, looking for spots to sell. And that's kind of where I've been. And it just keeps grinding higher. And when I look at numbers, I don't feel like we are too tight on numbers, the reason that we need to break out and rally. So a little bit crossways when we look at the fundamentals, but I guess they'll take it. I'm still feeling like they're going to be due for that correction someday. Not sure when it's going to be. Next summers are getting up to the upper 90s. So I mean, even across the board, we've got some pretty high prices out here that I would have to see some news for me to believe that it's going to have to stay here.
Yeah, and I think the higher cattle market has certainly helped pull along hogs for sure. Okay, the grain market, we're putting in risk premium, weather premium, war premium, all of those things. But one question I have for you too is, we've rallied pretty hard going into the WASDE report today. Unless we see something that is, really bearish, can the market keep going after that?
For me, yeah, you listed all of the reasons we're putting in a little bit of premium, and as far as our production number, yeah, it would have to be quite a ways off from any of these estimates if it's going to have a big move for me, because we beat that horse to death, and we know that there's variance in the crop from across the corn belt. So I feel like it's more the rest of the story. We're looking at South American weather. That's the most important thing for me right now. We're watching, and if we're going to have some rain in the forecast, suddenly we push it back a little bit, and we can put some premium back in, beans were able to hold halfway retracement. Feels like, okay, they're in a little bit of a holding pattern here, trying to decide if, if we're going to be able to put some back on. I think that the harvest lows are in. So we can kind of look at some of these other stories, the weather in South America. We've got wheat leading the charge a little bit, some of this war premium. And I think that probably should happen. I mean, when you have Russia blowing up a chip of corn and wheat, it feels like, when that war started, we would have really been charging higher on that news. So some of that news is still there. And I think some of that premium's got to be put in that could pull the corn just a little higher for us yet too.
All right. Thanks so much. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.